How's it going, Nick?
It's going great. How about you?
Not too bad. What do you think of this price line bouncing back there 20 points yesterday? Are you playing this at all?
I have not done Priceline yet for several reasons. It wasn't getting the love, even though everybody stepped up after it got shellacked and defended it. You saw a whole bunch of houses saying, "Oh, we're still," like maybe somebody dropped the price a little bit on it, but they were all maintaining their position on it. Plus, I was waiting for Draghi to tell us what he's going to do with the eurozone, and he kind of kicked the can, and everybody believed him again. So well, remains to be seen. There are some plays you can do on it for about 8% return, maybe 9% return, maybe even double if you do an iron condor on it using the November and December spreads. So if somebody wants to go bullish on it safely, well, relatively safely, you can do a credit put spread on it using November if you can get the premiums, although they're a little wonky. So you ask for a lot and see what happens. And if it doesn't happen, you can step out to actually November is pretty much dead as far as premium for it, unless you want to be aggressive, and I don't. So I'll pick December, maybe even January. But you can collect 8% return on money risk if you do one side, like a credit put spread. And we had recently with the correction, we kind of had a peek as to worst case scenario, at least given these variables that we have right now, and go thereabouts, which I think was what, 10.25 for it.
Yeah, we got down to 10.17 in October.
Right. So if you use that as a gauge and stay around there, you can still collect an 8 or 9% yield on money risk with a credit put spread that's about $5 wide. And you can increase the return, potential return by doing an iron condor if you want to risk another one. The flip side of it with a credit call spread a lot higher than that. So
can you outline that trade very specifically? Like sell
yeah,
out? We're gonna.
yeah, sure. If you're looking at price line, let's use the January because the premiums are a little clearer. So if I wanted to do something like sell the 1,000 put and buy the 995 put, and the premium right now is showing 55 cents, although I would start a lot higher just in case it's not real, and let's see what happens. So I'll ask for like 75 cents, and if it doesn't execute, I'll just leave it open and see if it trues up a little bit and just walk it down until it executes, as long as it still makes sense financially. So even if you collect 40 cents on it, the chance of blow up is pretty low, and the return on money risk is still 8%, even though it doesn't sound like a lot, 40 cents where you have $4.60 in risk, but it's risk you can see coming, and you can adjust it if you need to and close it and get out of the way.
Okay, we're on the line with Nic Chahine. He's a MarketFi maven and author of Create Income with Option Spreads. He joins us every Tuesday to give us his outlook on the market. But Nick, I got to ask you about the hottest stock around here. And I want to know if you're participating. And then also, we have a question about some of the premium in the puts. Alibaba. Have you been playing this run in Alibaba?
Yes, yes. And what I said to everybody that would listen to me is Alibaba, unless they're outright lying, is a long-term play. It's one of those things like, some people, say don't trade it. Well, I've traded it, but all on the long side, meaning I've got into calls, call spreads, leaps, and just gotten out, cashed in some premium. So it's a long-term play. So if you want to be cute with it, you can buy some lotto tickets and on the weeklies that are cheap. And but I think the easy play on it is like, I have a 13-year-old son. So if I buy him a 2016 call, I know it's going to be money for him to put towards school or something down the line. So it's a long-term play. Overnight, I think it touched 120. And now it's looking at 117. So not sure where it's going to open. Jack Ma is going to talk today on CNBC, and I think people like him. So this 116, 117 may get better as the market opens. So yes, today it's iffy because of the run it had. It was in the 99s not too long ago, days ago.
Yeah.
So it's like, what, 20% eyeball move in just a few days?
5 days.
Yeah. You can expect some downturns a little bit, but long term, if they're not lying, you can't beat the math.
What about this Alipay that they're talking about? That could be a potential another revenue source for them. What's your thoughts on Alipay?
I think it's a bigger deal for Apple than Alibaba, to tell you the truth, because you're talking about I read a headline about Alibaba and Apple doing something behind the scenes, right? So I'm not sure of the impact. I mean, it can only be good things. I think one thing that could disappoint in Alibaba is 11 Main. I've been a member since they announced it when they had like by invitation only. I was like, "Ooh, I'm invited. Let's go see it." And I was like, "This feels like walking into a Neiman Marcus. It's not going to appeal to the masses in the U.S." So I don't know what kind of impact people are expecting from 11 Main or anything like that. But I think if there's any weakness to it, it's that U.S. market crack of 11 Main of Alibaba.
Okay,
This,
go ahead, Dennis.
I was going to say this for the first time in a long time. We're seeing this thing trade down in the pre-market. It seems like we come in every day and this thing's trading 2 or 3 points higher. We've been talking about big buy imbalances that have been pushing this thing higher. And last night we had some comments from an analyst on Fast Money, which really knocked the stock down, and it's continued to knock the stock down. It's traded already 1.7 million shares here this morning, so that is just incredible volume here. So this is the first day we're actually seeing it trade down in the last, I don't know, 5, 6, 7 trading days. Is this the turning point? Short-term turning point?
Short term, maybe. I mean, somebody's got to take profit somewhere, right? Especially if the markets get nervous. So here's what I did with Alibaba. I bought calls and call spreads, and then I financed them by selling credit put spreads for November and December. And those are like in the money now. So if I'm worried about it, just to give you an example, you can still sell a November 106, 108 put vertical. So you'd sell the 108 and you buy 106 and you collect 20 cents. And you bring in some bullish money that way, cautiously leaving room for another $8 drop here in the next 11 days. So yes, it rose more than that in just 5 days, but most people would be willing to buy it around 100 because it got to 100 and look what happened. So the downside has to be limited unless we have a market correction. So long term, if I'm holding calls and they're a little negative today, I won't sell them. I'll sell credit put spread to bring in some positive money down this way, and withstand the whatever downturn it's going to have in the next few days, if it's going to have any.
Okay, we got a question here, an issue coming out of the chat, something we haven't talked about in a long time. The producer of Hunger Games, Liongate, LGF. I know that's a lower price stock for you, Nick, but could you just breaking out to new all-time highs here? Any take on Lionsgate, Lionsgate Entertainment?
First of all, I don't like to trade stocks that are like around movies. I don't know much about media that way, but it's not their all-time high. So what's to say that it's not going to go higher than this one? It's putting in higher lows, and it's poked through. Like if you draw a dirty line across like last month highs, it's poked through it. So it could revisit its all-time highs. I mean, there's no reason why it should stop. It's had 2 days ago, the candle was so indecisive. It was so big. It was like a doji the size of you know what. And the following candle was green and huge. So I won't stand in its way. And if I'm riding it with some green, I'd let it run a little bit more to see where it's going to go. So it may have technically some room. Fundamentally, I don't know much about the company, but I won't short it, and I'd be comfortable going along it.
One quick comment there for you, Rob Hood. In yesterday's trading, we hit a high of 35.15. You go back in this issue, and you are back up at this $35 level. You hit 35.29 back in November. So about a year ago, it got to this level and failed miserably. So like to see the continuation, get the close back out of 35, another close, plow through that 35.29 high. If this thing came back down under 35, got a couple closes there, you might get some big sellers reloading at that level.
You might get a little resistance from the options market at 35. It looks like the calls might stand in its way at 35, and it looks on the support side it's around 31. So it looks like the open interest in for November looks like it's set up between 31 and 35. Now that doesn't mean that this is a wall. It just means that this is where the options market is set up to keep it range bound. Like you said earlier, Dennis, the market wants to hurt as many people as possible, and that would be one way to do it, to be between 31 and 35.
And what about Apple? I've just noticed the all-time high at 109.40, all-time closing high at 109.40, and then you had multiple highs in that area. Let me see. The 109 calls big open interest, and maybe the 110s this year. Maybe they'll take it off at 109.50 and carve everybody out.
Yeah, I heard you made that comment earlier, and I'm with you on it. That with all this bullishness in the air, you'd think they'd be able to revisit the recent high, right? But they haven't, because even that high was made throughout. The open interest has been a wall for Apple lower than here, and then it pushed against all open interest to get to that high. But now that it's at 109, it's had resistance at 109 every week as far as open interest is concerned, and this week is no different. The resistance starts at 109. It was a lot bigger at 110, and just as big at 111, a little smaller at 112. So 109 to 112 is a formidable wall for Apple, and it would really need a good reason to go through it. Now on the downside, it supports start immediately at like 108, 107. They're both magnets, and they're kind of acting support if you're on the downside, and they have smaller support at 105, 106. So it is range bound. And when all the love is going to Alibaba, money has to come from somewhere. I'm guessing. They run to Apple in downturns because it's perceived sure money, or at least a safer bet.
It's funny how much order flow dictates charts. And if you look at from the last few days, look at the highs. You got 109.49, then you have a high of 109.30, a high of 109.32, and a high of 109.33. It's a weird number for it to top out at until you look at the order book. And in the order book, there's 149,000 shares for sale at 109.35. So it's got up there the last couple of days, and it just can't take out that huge seller because that is a big seller just sitting there in the book. And that's just what it's showing. There could even be more there. So that's a big reason for why Apple struggled up there for the last couple of days at 109.32. Takes out that seller at 109.35, then maybe it could open up to make a run for the 110.
Yeah, there's also something like a phenomena that happens in Apple. I call it the Apple bobber. Throughout the day. Yeah, if throughout the day it like finds a level and it seems like it bounces right at that level consistently. And yesterday it had one, and if you look up like on a 15-minute chart for the last 10 days, there's a bigger level where it bobs around 108 and a half. Take out the peaks and valleys, and it just like seems like a hand comes in and goes, go up, son, go up. So it's just a little, maybe it's Tim Cook buying his own stuff, I'm not sure. But, it's like shoots and ladders with this stock, and but yet it's still range bound. It's a little strange. So I'm bullish Apple long term. So if I were to set up a long term trade via credit put spreads or debit call, more comfortable with credit put spreads on Apple just because I'm confident in the level where it's going to get defended. Then I'll lay a couple in the next couple of months, and that'll be an easy, again, 8% yield on risk, dollars risk. You said earlier something that JC mentioned. I think it was JC or
JC Perrott. Yep.
About not knowing your level. It's basically you can't throw darts. You have to develop a thesis, enter a trade, and know where the trade is going to be busted. So if your thesis is broken, you should just move, get out of the way, or it reaches a level where you said, oh, okay, I'm out, then you should get out and not watch it go against you. We've all done it. I mean, I know we've all done it, but don't do it as a habit.
That's the one thing that is consistent on all the successful traders that we interview on this show. And I've been a prop trader for a long time with Bright Trading, seen hundreds of traders come and go. And I'll tell you, the successful traders all have the same mentality. They look at the trade and see how much money they can lose. They never look at the trade seeing how much money they can make. And when you approach the trade that way, you'll have a lot better recipe for success because it's all about risk management. This game is all about risk management.
Risk management, and there are a couple of facets of risk. There's dollars at risk and risk of losing. So that what are my chances of losing and how much am I going to lose? So the first decision is how much am I going to lose? How much are you going to put at risk? The second decision is where you're going to put the risk. So to see where are your chances of success and failure, and then you manage that. And if you imagine the worst case scenario in the market, with regards to your portfolio, and you're like nauseous, then you have too much risk. If you're okay, then you're really risking what you can afford to lose. So that would be probably the wisdom words for the day.
Okay, Nick, before we let you go, you always give us a good macro view on the market here, and
Oh gosh.
yeah, we're we're 1 month, almost 1 month removed here from the Ebola bottom, that V-shaped bottom. Caught
Yeah.
everybody going the wrong way. Now, we're inching up here. We're making new all-time highs on an incremental basis. Tighter ranges though, and kind of a tight range yesterday, tight range the day before. On last Thursday, you had a 20-point range. This is really out of the norm for the market here. Are you getting? I know you like to say, okay, come and get me. I'll write the 2080 calls or the 2000 puts or something like that. Come and
Yeah.
get me. Do you have any come and get me levels in the S&P 500?
I hear people talking about 2100s, and technically you can make an argument for 2100 in SPX. But my thoughts is my thesis really hasn't changed because the headlines haven't changed. The fundamentals, I should say, haven't changed. Now the headlines have abated, so there's no negative push down on the market, so the bulls are in complete control. Now, if let's step back and zoom out and say, okay, we've had a double since 2011 in the SPX. We've tripled since 2009 in the Nasdaq. We've quadrupled since 2002 in the Nasdaq, and we're in the last candle of the dot-com bubble. If you pull up a monthly 20-year, we're in the level of the last candle of the dot-com bubble, which was, the before the blow up. So we should, and the small caps is like 2.5 times your money since 2009. So perspective, zoom out, and yes, recent trends have. If you look at like 10-day trends for the ES and the NQ, which are the S&P and the Nasdaq, basically the channel, the up channel, the ascending channel that they were going through is tapering, and now it's flattening out a little bit. That doesn't mean they're gonna need another headline to bust out. What busted us out recently was the Japan surprise QE on that one Friday. And if you look at the NQ, for example, you can clearly see we stepped up a level on that day in the pre-market, and now we're trading somewhere around that level. So where is the next headline that's going to propel us the same way up higher? So I'm comfortable selling credit call spreads in the 2100 or close to, or 2075, 2080 under control and managing that. And I can bring in some positive money, make it an iron condor of sorts by bringing in some credit put spreads in the, just under 2000 and on a shorter term. So if I sell a December credit call spread in the high end, I'll sell like a November credit put spread to bring in money up until that time. So my break even point is a little bit higher so I can withstand a little more heat. But there's no denying that the bull's in control, but I just cannot go too long at these levels. My conviction is low in the bull thesis. I'd like to leave room for the bulls to run a little bit, but I just can't go all bullish, all in, like a lot of people are.
And what at the downside? Are there any levels where you're saying come and get me on the
I
downside?
Yeah, like this week I sold the 2019. I collected the 45, 50 cents, something like that and I still left it open because I have enough short risk to offset it. It's still showing 22 cents right now, with 4 days to go. So the market is 40 points higher than that SPX. So I sold the 2000, bought the 1995 for 50 cents. To me that's easy money. Famous last words. but easy money relative to the fact that it's offsetting some risk on the upside. So the risk that I have that's bearish just got I can withstand a little more heat just because I just brought in 50 cents to offset it. Does that make sense?
It
So
does. It does.
Okay.
And Nic Chahine has joined us here again on Benzinga's Pre-Market Prep, brought to you by MarketFi. Nic's a MarketFi maven and an author of Create Income with Option Spreads. Nic, thanks again.
Can I say one last thing before I get out?
Of course, Nic. Of course.
Okay. Don't short Amazon. Okay, there is a scenario where it hits 320, 325 easily from here, and if it does hit 320, 325, it's got another $20 upside.
Nope.
Oh, you like Amazon here? Had a nice
I
little
don't.
day
I don't want to
yesterday.
short it. If I don't want to go long it, I won't short